Home office deduction. Every time we talk about deduction, it's not the same as tax credit, right? Deduction means reducing your income. Tax credit is reducing what? Your taxes. So it's very different. Oh, maybe you wonder where I am today because the background is different than what you sometimes see. I'm at our Coralville, Iowa City branch, and the weather is so good out there. So it's hot, but it's not humid hot like Florida. And I like this Midwest hot. It's very healthy hot here. And when you have a home office deduction, and you must be in business. I say that today, but so many, before Trump's 2018 tax reform, I would not be able to say that because at that time, we have the certain home office deduction for employee. For people who work on the W-2, they also have a place to deduct home office if they are required or for whatever reason, they need to work from home, but no longer. And forget about the past. Let's look at today. And the home office deduction must be using your home for business. That's how you're going to have deduction. The home office deduction is available for homeowners and their renters and applies to all type of homes, mobile homes. And if you are really that brave, you are such a crazy entrepreneur, you live in your car and I know there are people doing that. That's why I say that. They live in their car. Can they deduct the car running expenses, whatever, to keep the car warm? Of course, that's their home. Okay, you prove that this is your home, then you can deduct. So if you rent, you can deduct as well. So question, someone said, I am employee. I receive W-2. Can I claim my home office deduction on my tax return? The answer is no, you can't. Okay, and but you may say that, well, that's just not fair. I worked at home, especially during pandemic. Hey, come on, I have to use my home electricity. I have to use my home internet, and I don't even want to go home. That work from home is not for me, and my employer forced me to work at home. Those kind of claim are a little bit funny, but let's say that's the truth. And then you cannot deduct your home office. What are you going to do? And you can work with your employer, have your employer pay you for the expenses that happen at home because you can't deduct it. But your employer can. If they reimburse you on your utility bill, on your internet bill, and it doesn't count as your salary anymore. It is reimbursement of your actual expense. But of course, you don't want your employer to reimburse you for a fixed amount. As soon as you do that, it has become part of your salary. So it has to be a real reimbursement, folks. I mean real, it has to be the reimbursement with dollars and cents. Let's say if your utility bill is $200 a month, but you use 1/4 of your home for your office work, then your employer can reimburse you 1/4 of that 200. You need to submit that whole bill to your employer in order that to not be included in your payroll. Make sense? All right. And for the entrepreneurs, for the bosses, for the business owners, and if you do that, that is your legitimate business expense. You can deduct that out of your income. You don't have to include that in your employee's paycheck, pay Social Security, Medicare. No, because you are doing actual reimbursement. All right. So next one. So there's a simple method of getting the home office deduction, okay, when you are in business. Let's look at what the simple method is. So on Schedule C, that means you have a business, you report your income expenses on Schedule C. And say the simple method is $5 per square footage of home used for business. So maximum is 300 square footage. This is the IRS rule, okay? Maximum is 1,500 can be claimed. So you probably hear some tax preparers telling you that, well, if you don't want to give me all the details of exactly how much your home office expenses. You don't want to tell me the percentage of your home, and you just know that the square footage, and we can do $5, we can give you 1,500 maximum. This is where that comes from. So on Schedule A, you can still deduct all your mortgage and the property tax with this simple method. So you don't have to say that, well, a part of 1,500 already including mortgage, interest, real estate taxes. So should I reduce that? No, you don't need to. You can reduce, you can do 1,500 and your mortgage and your real estate taxes, you still deduct them on Schedule A. Okay, example. John used part of his home for business in 2020. The total square footage of his home is 1,000, and he uses 200 square footage for his business. What is the home office deduction under simplified option? So what? Think. So that is 200 square footage times $5, 1,000. Not 1,500 because he only uses 2,000 square footage exclusively for business, right? Now, look at this one. This is the form that you would fill up if you are claiming Schedule C. See right here, simplified method. So you put in the square footage and it gives you your total home, the home square footage total, and the one you use for business times 5, so you got 1,000. See? So that 1,000 reduces your $10,000 income, so you only pay taxes on 9,000. You see, this is a deduction. This is an income deduction, but not tax credit, right? That's very different. I have a webinar on YouTube which talk about the difference between deduction and tax credit. And a lot of times, if I hear $5,000, someone tell me that, oh, there is the tax benefit for $5,000. And the one person says, oh, that's a deduction. The other person says, whoa, that's a tax credit. The difference is that that $5,000, if it's a deduction, you only save, say, $50 taxes. But $5,000 tax credit, that means what? That means you save $500,000 income. Very different, okay? So this is where I want to just plug in that little knowledge, and you can search our webinar list to look for the tax credit versus deduction difference, okay? Now, the simplified option Schedule C, example 2. John uses part of his home for business in 2020. Total square footage 1,000. He uses 400 square footage exclusively for his business. So now what do you do? And now this is a simplified option. So what we do is 400 square footage exclusively for business use times $5, we got 2,000. But remember, the simplified option is only for 1,500. So you scratch that. You go, I only allowed 1,500. So you use 1,500. Look at here. So you fill in 400, but you still put in the maximum, right? So this is where we want to explain to you how Schedule C works here. Now, with the same simplified option, remember, and yeah, you can deduct up to 1,500, but what happened to my property tax and to my mortgage interest? So here, and look at that red letter 4. That means in Schedule A, you can deduct all of it. Don't worry about you claim the 1,500. So under simplified option, you would still be able to claim the full amount of the mortgage interest and the real estate taxes on Schedule A. Let me show you. What that means is on Schedule A, you have this real estate taxes, you put in the full amount. You have this mortgage interest, you put in the full amount. You don't deduct the portion that might be included in the 1,500. Clear? So this is a simplified option for home office deduction. Now, let's look at the other way. We call that a regular method. So what is regular method? Regular method is that We don't want to go simplified. We just want to be regular. And on Schedule C, you need to calculate the business use percentage of your home. Okay, we're going on different method now. This is different method. So number one, you know the percentage. Number two, you add all the item can be deducted for the home office. And I'll tell you all the items, but there's a list of items going from utility all the way to phone bills, right? You're in home, so I suppose you also maybe have cleaning bills to pay. And what you bought home furnitures? Absolutely. They should be added together, and we will look at those lists. Apply percentage to the total amount of all items. So other than the furniture I said you bought for the home office, for example, you bought a printer for your business. And in your home office, that is 100% deductible. I would not call it home office. I would just put them under appliance for business, right? But what if you bought a table for your home office desk, like the one I'm using right now, okay? So you bought that, and that would be exclusively for business, 100% business use. So when you book them, it will be 100% business expense. It will not be prorated by the size, by the square footage you use for your business, okay? So other than that, the rest of it, like your utility, your phone bill, your alarm bill, your security bill, and things like that, your home in general, those are the ones you need to prorate that by the percentage of business use, okay? That's on Schedule C, you do that. But on Schedule A, you need to only claim the portion that for non-business use portion of mortgage and the portion of property tax, because the portion with business already deducted on Schedule C. So on Schedule A, you would want to make sure that you only use the portion that is for your business. So if I add Schedule C number to the Schedule A number on your mortgage, it should equal to your total mortgage. Make sense? All right. So let's look at what are the items normally you would see. See? Mortgage interest, insurance. Oh, home insurance. Yes. And utilities, repairs, if they are affecting your home office space. Of course, if that piece of roof is leaking, yeah, you need to do that. Maintenance and depreciation. Depreciations are things, maybe you ended up building another wall out for your home office. We have home office were used for a certain testing. And there's no way they can bring that into the home. So what they did is they expanded the garage to, the garage is only so deep. They expanded the garage to be deeper, so they have a whole section of home office use for that. So that would be depreciated for the build out, right? And the rent. So you may be renting a place, and I think this is where they say that if you rent a 2-bedroom apartment and the 1-bedroom you use for business, there you go. That's your home office expense, right? Utility. Now, let's look at example. Example always help us to hone into the point. I like to give examples, and my folks are really good at using ordinary examples to illustrate a high point. So you don't have to be turned around by those big numbers they throw out there. We use small numbers, easy to understand. So let's see. John uses part of his home for business in 2020. The total square footage of his home is 1,000, and he uses 200 square footage for his business exclusively. You see how that word is there? What that means is that if you get audited and you have home office expense, the auditor said that, do you have a home office? Yes, I do. And what do you use home office for? Oh, when the kids goes to sleep, I just work there. If they wake up and they play in the home office, because they play in that same room because it has their playground there too. That doesn't help you with getting the approval from IRS. It's exclusively means you don't do anything else. You go in that door and you are working. So in the very, very early days, like in the late 90s, early 20s, when I started working on the community CPA business, and I did it from home. The first couple of years is at home. So I have this room, and my kids are little at that time, so they have to knock the door to make a request before they can come in to talk to me. So that is how exclusively it need to be, not just because of taxes, it's also because of the work, right? You don't want the little kids to come in and every time they see mom home. So that's give you that the viewpoint of what means is exclusive. Your bedroom should not be there. Okay, that should always just be your office. And John has mortgage interest of 12,000, real estate taxes of 5,000, utility of 2,000, insurance 3,000, internet 900 paid in 2020. So what is the home office deduction under regular method? So we're talking about regular method. Now, calculated business use percentage, 20 over 1,000 square footage. We're talking about 20% of usage. Add item can be deducted together. So we add mortgage interest, real estate tax, utility, insurance, internet, 22,900. 22,900 times 20%. What do I get? 4,580. So this number, I will put that in this Schedule C calculation under Part 2. It's called the figure your allowance deduction. So it is actually asking you and what you have in here. So it gives you the home office portion. You see right here, they actually prorated 20% for you already because it's right here. It is the 20 over 1,000, and that's 20%. So 20%, and they came in to prorate all of these. These 10,000 is their income, okay? So this 20% is the ratio we were looking for. This 22,900 is all the expenses we were adding up. So we now take 4,580 to deduct, right? Now let's look at what happens for our taxable income. Because remember, we make 10,000 income, right? So remember, this number was like $1,500 at one time because we used the simplified version. Now we use regular one, so we got 4,580. This is why sometimes when you come around say, I want home office deduction, and the next question is, do you know how much your real expenses is? If you know the $4,580 more than 1,500, then we should use the higher one. Am I right? So your taxable income is only 5,420 versus earlier. Remember, it was 9,000. It was 8,500 taxable income. Now let's look at what happened to our Schedule A in the regular method. Remember, 20% is used for business. So what? 80% is used for personal, right? So with 80% used for personal, you would only take the 80% of mortgage interest and also 80% of the tax. So what was it? The tax amount was 5,000, remember? So 80% that is 4,000. Mortgage interest was 12,000. 80% of that is 9.6K, 9,600. And then look at our Schedule A, folks. The Schedule A on the real estate taxes is no longer 5,000, it's 4,000 because you include the other 1,000 in your Schedule C for deduction. Remember that 4,000 some dollar amount? That include that 1,000. And your mortgage interest no longer 12,000. And under the simplified method was 12,000, but regular method is 9,600. There you go. So you properly accounted your home office deduction by regular method. So now, and this is the end of our today, but let me quickly summarize for you. So as soon as people talk about home office, you want to immediately assess yourself whether you can or cannot. If you are an employee and you don't have home office deduction, and the way to get reimbursed is to work with your employer. Okay, that's number one. Number two, if you are an employee, but you also have a 1099 income, and you have a case for claim home office deduction because your 1099 income is a contract labor and you are contracted to do certain work, you certainly don't have an office for that, so you are using your home. But of course, in some instance, you have the office, then you don't claim, right? But you have a chance, you could claim if you have 1099, NEC, right? Non-employee compensation. What if you are an entrepreneur, you are a business owner, and you have home office claim, period? You can do that. I mean, if you ask me, I don't do that. And just because my office and my home is like 3 minutes drive, if I ever want to work, I work in the office. Why do I need to be working at home? So I don't have that expense, but people do. And you may be working in the place, but you drive home and you don't want to go back anymore. Or you may be doing your accounting work and stuff at home all the time. So that become your regular office. So you have the claim. Once you have the home office situation, then you actually have a situation where you need to decide a simplified version is good or regular is good, right? And you already knew from this webinar we gave you, you know what is good. And so you can actually make sure that you calculate that and make determination. And you don't have to make the determination 1 year and use it forever the same way. Home office need to be looked at every year because you might be having different home, and or you might be, buying a home instead of renting a home. There's so many situations happens, and then you can determine what you want to do with your home office. Or maybe 1 year your business didn't require you to work at home. You always work at a client site, but 1 year you need to work at home. So it is flexible. It doesn't need to be a tattoo on your tax return, right? So you can always consider what is the best way to do the home office claim. So I think I am good with the rest of the webinar. I hope you got something useful for yourself, and I will see you on Saturday.